again, another effort to kind of share between the two offices. So, I think what we're going to do is establish, it's the first Friday of the month. So the numbers from last month are out. So we're going to be doing a kind of market update once a month and kind of share everybody's thoughts on where the market's headed and what's going on. But to get us started, I thought Tiffany could share a few things on the mega camp coming up, if you want to share with what you need on that.
Yep. Okay. So for all of you that don't know, Mega Camp is coming up on September 15th through 17th. And so the two market centers have come up with an awesome opportunity for you to get your ticket basically paid for. And so you'll be seeing this flyer going around. And so this is just a quick reminder, there's 4 ways for you to win. If you bring a guest, you get your ticket and a guest ticket for free. If you bring 2 guests, you get your ticket, a guest ticket, and your agent bill, and so on and so forth. You can read the gist in this image. And so check your emails. You'll be seeing this coming out more. We definitely want to incentivize bringing people. We're also working closely together between the market centers to figure out a way where we can do a safe physical type gathering while still being safe through COVID and making sure everyone is covered and all that. So be on the lookout for more information. But if you want to participate, you can shoot me an email at Tiffany A. Davis to learn more, and I can tell you more details. That's all I got.
Great. Thanks, Tiffany. And just, couple quick updates. So, we're still full search mode for the team leader for Mount Pleasant. And, we're narrowed down on the choices and we're getting close to that. So for now you have to put up with me. But, so anyway, we're keeping everybody in the loop, but we're still doing that research so we can bring you somebody who's a top-notch choice to put in front of the ALC and kind of make a decision from there. So just a quick update on that. Joseph, do you have any broker stuff that you need to add today?
Nope. So fairly, nothing really to update. I'll probably send out an email next week on a couple of clarifications that I've seen a lot of, but nothing really that major that's been jumping out this week.
Okay. Vince and Tiffany, do you have anything that you need to share before we kind of deep dive into market stats?
I'll say one other training. If you, Quantum Leap is coming to Charleston on August 19th, and that's open to all market centers. And so I'm going to put the Eventbrite link in there. It's a 9 to 3 mindset course that Gary Keller wrote himself. And so that is coming up as well. So that's the only other big event I have.
Okay. Well, thank you. Well, I'm going to share my screen now, make sure everybody can see it okay. Let me see here. All right, can everybody see the market monitor screen here? All good? All right, so July ended, and what a month it was for real estate here in Charleston. So just wanted to go through stats. So for those of you who don't know where I'm at, I'm under Market Monitor, which is provided to us by our MLS. So as an agent, you pay for this service. So deep dive into it and learn how to use it because it really can help your business. But what I'm going to go over today is kind of an overview. I encourage you, to be able, for your specific listings or properties or subdivisions or your areas, use this to do the research to help your clients make decisions, but also help you understand, where the business is headed. So this is just the main page. So what I'm doing right now is just all price ranges. So this is the entire MLS. So I'm not filtering anything out at the moment, but you can see median sales price. So look at July, 9.5% higher year over year. So what this is showing us, so July 2020, 305 was the median price. If you scroll back in time, you can look, July 2019 was 278, 450. That's a pretty significant jump, but I also want to make sure that everybody understands that this is median sales price. So median means that half the homes sold in Charleston were above this value, half were below it. So don't necessarily immediately go out and tell your sellers, hey, your house is worth 9.5% more than it was last year. if Charleston is selling a lot more higher end properties, this value will go up, and it doesn't necessarily mean every house is going up by this percentage. This just shows what median price point is selling. So be very careful not to go to your seller and then all of a sudden they want 10% more than their home sold for last year and then 10% more from the year before. So be very careful on how you use this number. Now you can see I'm doing a monthly. So the way this works is I'm doing monthly. So this is comparing July 2020 to July of 2019. But if I go here, I can flip and say, here is a rolling 12 months. So now look at the rolling 12 months. So this is taking 12 months as an average. So the past 12 months from July 2020 is 4.2% higher than the previous 12 months. So this is a more accurate way. Instead of looking just July to July, this is kind of a better feel for probably what the more accurate appreciation rate is in Charleston. But look at how consistent this has been. And again, you can go back here and you can go 1 year, 3 years, 5, 10, or max. So I'm on the max right now. So the data, obviously there were MLS sales before 2004, but the data only goes back on these charts to 2004. But just wanted to put a perspective, look at from the middle of 2011 roughly, it's almost a straight line in value up, right? So we're getting close to a decade of very consistent growth in price. And if you look at this line, this is probably right around a 4% line for 9 years, right? So very consistent growth. Now, for those of you who are in the business here, back in 2004, 5, 6, look at the rise, the fall, and now that's 9 years of steady growth. And obviously with what's happening right now, that continues, the trend continues, fortunately for Charleston. Now, if you look at, so we're doing the 12 months. So if I go back to monthly, right, you can see some degrees of seasonality. So this is a much more, it's not a consistent chart because it's looking at a month at a time. So for a smooth chart, it's better to use a rolling 12 months for a long-term trend. Look at price per square foot. So price per square foot has a very similar trend, right? We were under $100 a square foot as a median price per square foot, and we've gone up to 150. And still, it reflects 4.2%, right? So that is showing to me that that's probably a very kind of accurate assessment of home sale value increase over time, and very consistent again over time. Percent of original list price. So when we break this one down, so, again, it goes back to 2004. So look at January of 05 to August of 06. And again, honestly, it was over 100%, but I think there's something with this market monitor program that caps it at 100%. But you can see we were over 100% for this period of time, went down, and again, this is the whole market. We went down to 92.6, right? And then we crawled back up and we're flatlining about 98%. We started dipping at the end of last year, but then now we're coming back up. And if you want to break it down monthly, so look at last month. So July was 98.7%. So when you look at historically, we're hitting highs that we haven't seen since, right before the recession. So you can see where the market is trending right now, but even looking at it as a rolling 12 months, you can kind of see how solid it is. We're sitting about 98%. Now, again, it's very important to understand is that this is the market as a whole, which for you as an agent is important to understand, but for your specific property, dive, and we'll do this as an example here in a second, dive into more specific for your property you're analyzing. Don't do the market as a whole. Days on market. So here's our days on market, right? So this is, again, rolling 12 months. So we're sitting about 21 days on the market on average right now. But look at back when we had the recession, we were about 72, 73 days on the market. So, we hit a low of 22 right before the recession, hit a high 70 to 75, and then fell back off again. We're down to 18 days on the market back at the end of 2018, and maybe we're headed back there right now, but still a very low days on the market on average. So this is for statistics, if I can only know one piece of information, months of supply is always telling me where the market's at. So look at back historically. So we'll start back in '04. The months of inventory headed down, and we hit a low of about 3.2 at the end of '05, beginning of '06. And then we went back up to 16 in the recession. So the easiest way to look at this number is if you have 16 months of inventory, one of those 16 sellers was going to sell that month. That's pretty much the easy way to do the math. So you had 16 for sale signs, one of those would close that month. Back here, it was 1 out of 3. We worked our way all the way down. We started to see a little increase here. And then all of a sudden, this is pre-COVID though, right? So all of this, look, October, November, December, January, it was already trending down prior to COVID. Now we're just accelerating that trend down. So look at the MLS as a whole, 12-month rolling average is 3.4 months of inventory. So what's the dividing line typically for buyer's market and seller's market? It's typically 6 months, right? So we are, as an MLS as a whole, we're in a pretty strong seller's market right now. Now, what's interesting, that's a 17% improvement from a year ago. So if we go back to a year ago, let's pick July of a year ago, we were 4.1 months. So we've dropped from 4.1 to 3.4 on a rolling average. But watch what happens if I look at on a monthly basis, look how low we're going. So July, based off the closings, 2.3 months of inventory, right? 2.3 months, 45% improvement. So look at this number here, 45% better than July of last year. So July of 2019, we were at 4.2 months. July of 2020, we're at 2.3 months. So we are almost where every other house will sell this month, right? And so, for example, we have more under contract than we do actively listed right now, which is reflecting this type of months of supply. So, and look at historically, even in the boom, we never really got below 3. Right, so we are at, for a monthly basis, we're at an all-time low. And again, perspective, we were at 17 months back in, you know, the, so to speak, peak of the recession. We were back at 17 months of inventory in the spring. So we are at 2.3 months of supply.
Hey, you missed me.
If I go look at homes for sale, so here's the homes for sale. Back in pre-recession, we had about 4,000 for sale. We went up to 12,000. And you can see the seasonal trends here. Look what's happening right now. We are at, you know, and again, if I go look at the MLS right now, I think it was 3,731 when I checked it earlier. And I've seen a low of 3,690 or so. So we're at 38% less for sale today than 1 year ago. So if we go back to July of 2019, we had 6,308 properties for sale, and now we have 3,890. So that is a fairly remarkable change in that inventory. You know, and so this is what we're running into, is that you have to go find properties that aren't even on the market to get your buyers a house. So again, limited inventory is going to drive, you know, prices. It's going to drive the buyers to finding properties not on the market. So you have to become creative right now to find properties for your buyers. And that might mean going and finding properties that aren't currently listed, which also gives you opportunities to lead generate. So 3,890, again, today we're at 3,721. So that trend is still lower over time. And even if I do a rolling 12 months, you can see that big dip here. And don't pay attention to the rolling 12 months as much on, because we're really interested in what's the count today. And you can see how much we've dropped off. But you can also see this is pre-COVID, was starting to drop. You know, this trend was already happening. Closed sales. So 2,400 closed sales, residential, right? So not vacant land, but 2,400 closed sales in the month of July. So let's look back in time. High, we closed 2,001 in June of 2017. So we are 400 or 20% above the highest that we've ever done. And so you can see this trend here. We go from May, which again, keep in mind, May closings, what were those? Those were, a lot of those contracts were written while we were shut down. And then June jumped to 2,058 and July jumped to 2,400. So the last 2 months have been the highest months ever for closed sales in Charleston. And what does everybody think August is going to look like? I think August is going to look a lot like July. You know, we're going to be way up here on closed sales. Look at how many houses are under contract, how many contracts have been written. You know, we're going to be up there in the numbers with July. So 32% higher closed sales than last July. So if we go back to last July, we closed 1,824. We closed 2,400 this July. And again, if we roll it to rolling 12 months, you can see this little jump here. But from on an annual basis, so we at the peak before the recession, we were closing 18,000, a little over 18,000 houses in Charleston. And then we've been very kind of steady, you know, 17, 18, 19, you know, even in 20, we've been 18,000. Well, for perspective, I feel like, you know, this number, so the last 12 months, we've closed 19,000 properties. And what's happening in July, August, probably September, I mean, this number could go to 20,000 as a pace of closed sales. So there's your closed sales, new listings, right? So here's our little dip, right? Obviously due to the shutdown, and then the comeback. So let's look on a monthly basis. On a monthly basis, the number of new listings is up 18% from last July. So if you look at last July, we were at 2,179, and this July we're at 2,562. But you can see this chart doesn't look that different than 19, 18, 17, maybe even 16, right? Doesn't that look very similar? So we are still at the same pace of new listings. It's just the number of houses going under contract and buyers out there is significantly higher. And the only difference I would say is look at these peak new listings. It's usually kind of March, April, May, right? When you look at, there's March was the high. This one, March was the high. This one, March was the high, right? So when you look on a seasonal basis, March is usually in that time frame of the peak of the new listings, whereas we just delayed everything probably 90 days or so with COVID. So now we're in July, and I'm not saying we're peaking, we're probably pretty close to the peak with new listings. So it's pushed everything back 90 days, but the chart for new listings looks very similar to the last 4 or 5 years. Pending sales. So look at pending sales. So here we are in shutdown mode. So here's April down to 1520, jumped in May, jumped again in June, jumped in July. So we put under contract in July. And when they say pending on here, they mean active, contingent, and pending. It's grouped together as one category. So pending sales jumped to 50% higher than last July. So think about that for a second. Last July, we were at 1,738. This July, we're at 2,596. So we put 50% more under contract in July. What does that mean for August and September closings? You know, that means we're going to have probably record numbers for August and September. You know, you can't put this many under contract in 1 month and not think that that's going to reflect on the closed sales. And you can see how much higher. The peak ever, I think, was May of 2019. We put 1,950. So we put 1,950. So we're 2,600. So we are, you know, crushing any sort of contracts and closing numbers historically in Charleston right now. And then, you know, if you go back to the rolling 12 months, you can see this peak right here. So here's a good example. If we go at this pace, you know, we're going to close, we've written in the past 12 months over 20,000 contracts. So, you know, we're headed to that type of level that we're going to be closing over 20,000 in a year at this pace. Dollar volume. So dollar volume is special for agents because what does that mean? That's how we get paid, right? The higher the dollar volume, the more we get paid. So here's your rolling 12 months. And I just wanted to put perspective here for everybody. So I started in 2001, which is pre this chart here. But in 2001, we were sitting right about here, about 2 billion in sales, right? So about 2 billion in sales. We peaked in the middle of 06, about 5.2, 5.3 billion. fell back down to 2 billion, right? So we in August of 09, we closed on, on a 12-month rolling average, we closed under 2 billion in sales. But look at from August 2009, right? So we're almost 11 years later, right? We've gone from 2 billion in sales to, look at our pace right now, 7.2 billion. And I think when we do this meeting again in 2 months, I think once August numbers and September numbers are in, this is going to show 8 billion here. So we're going to go from 2 billion to 8 billion in 11 years. That's 4 times. So that's 4 times the income available for agents to make. So again, for perspective, we were at 2 billion sales in 2001. We returned there again in 2009, but now we're almost going to close 8 billion in sales in a year in Charleston. And what's remarkable is, and this is, again, I'm not a social media person, but all our agents that are, you need to basically promote some of these things on Facebook and social media. And the one item on here that I think is the most powerful is, let's go to monthly. Look at monthly sales. We closed over $1 billion in residential real estate in the month of July, over $1 billion. So look back in time what $1 billion means. And again, the highest number before, and let's take out June. So look, June we closed 802 million. So before this year, the highest we'd ever closed was June of 2018. We did 765 million. So and again, reference point, 765 million to 1 point, as an all-time record, to now 1.005 billion. That's a 31% increase on an all-time record in 1 month. So again, is this something to promote on social media? We closed $1 billion in real estate in 1 month. So out of all the numbers I'm going through today, I think that's the one number that kind of stands out as a wow moment. Is the first time we've ever closed $1 billion in real estate. Now, my gut is wait until August is over, and that's going to be another $1 billion month. I think we have too many under contract that we're going to crest over $1 billion again next month. So again, look at historically. I mean, historically, it is, we closed 112 million in 1 month in 2009. We're closing over $1 billion this month. So again, it's blowing records left and right off the chart. So again, watch August and September. I think they're going to be, I think August will be $1 billion, and I wouldn't be surprised if September's over 800 million. So we're going to set several months in a row of all-time records. And then these last two here, this is all tied to showing time. So, any house that's not listed through showing time, you just have to keep in mind that this is only the data coming through showing time. So this has been very consistent, and they only have data through showing time back through 2012. So you can't go further back than that. But this is a good example to show to your seller clients, is that the median showings to pending. So meaning typically your 12, 13 showings, you're getting the contract. So if you have listings that have more than 12 or 13 showings and you don't have a contract, you need to be having a conversation with that seller. This is the median, shows to pending. And then here's the showings per listing. So you can see this jump up in showings per listing. So right now we're averaging about 8 per, so in July and June, we were on typically 8 per listing. So if you have listings out there getting less than 8 per month, well, you're below what the median and the average are. So it's important to share some of these pieces of information with especially your seller clients so that they understand where they stand in the market. And obviously you can see the seasonal trend with showings. So and here we're just a delayed seasonal trend into July that usually would reflect, March, April, May. Now, historically, what's interesting to note is that, I have a lot of times you'll have a seller say, well, when should I list? What's the best time of year to list? And again, obviously it depends on what their motivation and reason is, but look at the peak month. It's almost always March, right? So if you look at history, now forget 2020, right? But if you look historically, it's almost always March. Well, doesn't that seem a little early? Well, it doesn't to me because I know the trends of the new listings coming on the market and the buyer contracts. If you're in the early part of the season, you don't have that competition. So the reason why the March showings are typically the peak period is because you have less competition as a seller, but the buyers are showing up. By the time you hit April, May, June, look at the downward trend, right? Because you've already let the other competition, meaning listings, hit the market. And yeah, there's more buyers, but there's a lot more for sale. So the earlier, in my mind, the earlier the better. So as we're starting to roll into the new year, if you need to have conversations with potential listings and they're like, oh, we'll wait till the kids are out of school, or we'll wait until May to list. It's like, no. You want to list right when it's starting to ramp up. So, once you get into, February, March, that's when you want to be on the market because you're going to have the best captured audience for buyers, for going 2020. So again, use all of this information to your advantage, so that you have a better understanding, but also you can explain this to your clients. And this is the overall market. Again, I did all of MLS. And before I go do kind of maybe a couple breakdown examples, are there any questions? And again, if you need to hit the chat box, I think we can see some things that way. But if you have any questions, feel free to ask. So again, this is important to understand, is that this is good for an agent to understand exactly what I just went through. But from an overall market standpoint, I think what's more important is that, okay, well, how does this matter to my client, right? And my transaction. So what I want to do is just kind of show you the differences. So let's go back to sales price for a second. So if I go back to sales price, here's historically what the market is doing, right? And you can even go down here and, sorry, I'm just going to get these out of the way. If I go down here and I do the rolling 12 months. So now let's go look at an area. And I'm not trying to pick on this area. I don't know if Karen Abrams is on the call, but here's downtown. So let's go downtown for a moment. So let's do area 51. So watch what happens, and let's go through some of these same charts. So here's area 51. And again, this goes back to 2004, so it's the same set of data. Look at the July price, right? Is that higher or lower? So we're actually lower in area 51 than we were a year ago. And you can see this trend here. So you can see how polar opposite an area can be compared to the market as a whole. That's why you should be very cautious about showing your seller client downtown. If you show them the overall numbers, like, oh, I'm going to add 10% to the value of my house. And my conversation might be, well, we might have to actually go below what you thought it was worth a year ago because your area is trending differently, right? So that's very important to understand the difference for your specific client. Look at price per square foot, right? So down 14%. So steady growth up, but then what all happened in here? There's some stuff happening in here that's causing this to have this downturn. So again, your conversation needs to be different if you have a client that you're working with downtown. Percent of original list price, what happened here? So we went from 96% and now we're down to 91.7. Is that a positive or negative trend? And I'm just asking rhetorical questions, but you can see the differences in the areas. So down that, look at days on market. Is that positive or negative trend? Up 135% in a year. So 73 days on the market compared to, a year ago, we were sitting about 30. Months of supply. So now months of supply, no change, but I want you to, fairly steady, but I want you to note that's 13 months of inventory. What was the MLS as a whole for July? July, we were at 2.3 months, right? So 2.3 months compared to 12.8 months, is that a different market? It's a completely different market. So, based off of those numbers, you should be able to read specifically for your client what's happening in the market. Look at downtown. We're almost 50 months of inventory in the recession, 50 months. So for perspective, out of every 50 homes, one would sell every month out of every 50 listings. So again, 12.8 months is still considered, you know, on that edge of a buyer's market. Homes for sale. Now, again, increase. And again, here you go. Supply is increasing, right? And let's jump to pending sales. Pending sales is flat, you know, a good last couple months, right? Up 21% from a year ago. So it's a good sign that there's more under contract, you know, on a rolling 12-month basis. Closed sales, drifting down a little bit, right? But, you know, not falling off, but drifting down. Dollar volume is drifting down. And remember, dollar volume, that was at $1 billion sales. Downtown did not participate in that growth, right? So the market as a whole was up 31%. Downtown was down 8%. So again, you know, look at those numbers relative to the market as a whole. Let's go look at another area. So again, we'll pick Johns Island, right? So Johns Island, here's your, let's start with the sales price again, right? So sales price, there we go. So up 23% from a year ago. And again, be very careful. That doesn't mean necessarily that somebody's house value went up 23%. It means the median price of the homes being sold on Johns Island are 23% higher than a year ago. What's driving that? Well, it's new construction, it's higher end sales. You know, all of that is driving why this is higher. It doesn't mean somebody's house went up 23% in value. Percent of original list price. I mean, they're sitting still right around 100%. You know, so that's all probably a lot of new construction that's kind of driving that higher there. Days on market, almost nothing. I mean, isn't that incredible? 4 days on the market. You know, it's like you put it on, you're probably gone within the week. Months of supply, look at that dip, 1.8 months. So 1.8 months on Johns Island. Homes for sale, look at that. Look at that drop, 40% year over year. And we're getting back to the numbers we had in 05 as far as homes for sale. Closed sales, again, a record for closed sales, 68% more than a year ago. New listings, again, this is what's trailing is the new listings. We're not setting records, you know, for new listings, but we're setting records for pending sales, you know, between May, June, July. I mean, we're up 84% on closed sales. So almost doubling on Johns Island closed sales in a year. And look at dollar volume. So dollar volume from last July up 115%. So what does that mean? Johns Island sales more than doubled on dollar volume in the past year from July to July. If we go look at last July, we are right here. So 22 million in sales last July, almost 49 million this July. So you can see the difference, and I'm just giving you a couple examples, but you can see the difference. Like here's the market as a whole, but now let's go look at different areas or even different, you know, you can break down even having different subdivisions on here. So they allow you to do, you know, all, which is obviously the citywide MLS. You got counties, cities, zip codes, areas, subdivisions, subsection. Now, also keep in mind, if you don't have much data, it's not going to make any sense. So you have to have a big enough area where it's going to make sense. Let's go look at, I think I was in, let's see here. I do this right. So here's, oops, this must not be the one. There's a couple, here's a, one I wanted to look at was, maybe it was this one here. Let's look at, we'll jump to one other real quick. Look at Daniel Island. So when we look at dollar volume, look at that jump. 145% more in dollar volume this July compared to last July. So again, they did 51 million last month in closed, this is closed sales, 51 million and 54 million. Last June and July, they were doing about 22 and 33 million. So you can see that significant jump. And again, you can see it in the months of supply. There's only 2.7 months. So it's 50% better market on absorption than last year. But again, you can go do this. I mean, even look at Kiowa. You know, you want to talk about high-end properties. Look at the months of supply. I mean, they're almost a neutral market, which is hard to believe on Kiowa. Look at the, again, there's obviously some monster sales that happened here and here that you kind of have to ignore. But if we look at dollar volume, look at that dollar volume. And again, this was a big, big sale that happened here. But they did 25 million and 23 million, up 448%. So they're doing 4.5 times the volume they were doing a year ago. And it just shows the high-end sales, the money is showing up. If we do, you can do, so let's go back just to show you how you can do all this. But if we go back, you can do a custom area. So let's just do over $1 million. So look at over $1 million properties here. So if we do $1 million or more, all areas. So look at that. The $1 million plus properties, dollar volume was up almost 160%. So 1.5 times, you know, so over double what we were doing a year ago in the high-end properties. If you look at the months of supply, down 43%, you know, so we're down to almost a neutral market in that type of environment. Pending sales, look at this. So we have 162% more under contract on the $1 million plus properties than we did 1 year ago. So July of 2020, 168 under contract, and July, let's go back, July last year, 64. Now, I'm still trying to figure out some nuances about Market Monitor, because if I go look at today and I say, show me how many $1 million plus properties are under contract in Charleston, it'll tell me about 240. So, but again, you can see historically the trends in some areas and some price points is through the roof. But so, I mean, if you're going, and again, months of supply, back here, when you had 70 months of inventory on high priced properties, is that a listing you really wanted? You know, you were competing with basically 70 other listings to find that one buyer that month. That was not a fun place to be. But now, when you got $1 million plus property and you're competing with a few others to get it sold, you still got to be priced right, and you still got to be staged right and have everything right. But you got a good chance of selling that $1 million plus property. So again, it's a difference in the market that is being dictated by low interest rates, people wanting to move here, low inventory, sellers not wanting, the local sellers not wanting to move for many reasons. So, you know, all of this is coming into play and having a huge influence on how we're operating our business as real estate agents. But I can't stress enough the importance of being able to convey some of this information to your clients. You know, I think looking at the all areas and all price ranges, I think that's important to understand, you know, how the market is trending as a whole, so you understand as an agent what's going on. But really, when you boil it down to what matters to your client, it's putting some more details into what their specific home, if it's a buyer, what their needs are, if it's a seller, what area they're in and what they're trying to sell. But you can see the little piece of information you can gather from just looking at these. It has a huge influence on you, your conversation with your client, that you're going to appear to be the expert in your area, and they're going to stick to you, they're going to listen to you, and you can use this as leverage to get them to the right price if you're a seller, and understanding the different areas. So, I know that a lot of you have been on this Market Monitor before with me, but, you know, I can't stress enough. It's like, yeah, it's great that once a month we can share this information, but use it on your, go to back some of your listings you have right now that aren't selling and run these numbers and pick up some piece of information that might help you, you know, convey to your seller client what they need to do to get the house sold. So, and again, I watch the numbers on a daily basis, some of them, how many are for sale, how many are going under contract, and because you can see the trends coming. So you want to be ahead of that curve when things start to change. And, And again, don't count on Charleston selling $1 billion in real estate every month, right? This is an anomaly that and I did some number crunching on how many sales we missed because of the shutdown. And my math based off of, we were trending positive January and February. So year over year, we were up about 14%. So those number of closed sales, so that number of closed sales, when we break down, just go back monthly, and let's only go back 3 years. So again, this normal here, March, April, May, we're off, right? Because of everything happening. Whereas now we're catching back up with what was missed right here. So when I did some math on based off our projected growth, just pre-COVID, we missed about 1,100 sales in Charleston that didn't happen because of the shutdown. Well, what this is, your June, July, August, that's us catching up on those 1,100 sales. So keep in mind that this is not a new norm. You know, the 2,400 sales a month is not a new normal that we're going to have. It's catching up with what is missed back here. So take advantage of while we're here and get your listings sold and you know, while the buyers are there, while rates are low, and we missed on these opportunities here. This is kind of a correction to the miss of opportunities. So we are not going to set a new pattern of 2,400 sales a month. First of all, we're going to run out of houses to sell. You know, in order to have a transaction, you got to have a seller and a buyer, not just a buyer. So it's great for the market, but we have to get some houses on the market to keep up this type of pace. And we're just losing, you know, homes for sale. Look, I mean, here you go. This is breaking down. Again, I'm only going back 3 years, but look at this fall off of houses for sale. And it's being driven by two things. One is all the buyers coming on the, you know, coming to the market and putting houses under contract. But the second thing is your local sellers just don't want to move. You know, they have to have a motivating factor to move. They might be in their house at a low interest rate. And yeah, I know rates are all-time low, but when you're already at 3.5, 3 doesn't sound that much different. So it's a matter of find those sellers, you know, who are motivated to get it on the market and get it sold, because we need sellers right now to keep this type of volume going. I mean, we lost 38% of our listings year over year, and that trend is still down. So anyway, just everything to keep in mind. You know, the plan is to kind of run through these numbers, you know, the first Friday of every month. So we're kind of looking at these same things and watching the trends so we can get ahead of it. And I can tell you from personal experience, and I find this hard to believe, is that anybody who didn't see the recession coming last time had their head in the sand, because when you look at what was happening with inventory, here's houses for sale. So let's go, we had about 4,300 in the middle of 05. And by 07, we had 12,000. If you didn't see this trend happening right here, look at this, this is 06, right? So in 2006, everybody should have seen the recession coming, you know, from a housing recession standpoint. But when did everybody say there was a problem? Everybody said there was a problem right in here, right? 2008. Well, 2008, we had already peaked out on inventory. We were already past the worst part of the numbers, but that's the first time that everything kind of started to come to, you know, a crisis situation. So, you know, and I'm not saying we're going here by any stretch of the imagination, but being ahead of it and watching this on a monthly basis, you know, even if you just log in here once a month and listen to the conversation and join in, it's like once a month, if you're watching what's happening, you're going to see ahead of time and not be this, you know, back when this happened back here, everybody's all of a sudden in crisis mode right in here, where they should have been in crisis mode in here. Like 2 years earlier, they should have realized what was happening. So anyway, Charleston we are very fortunate to be where we're at, you know, in a real estate market standpoint. Not every market looks like ours. So, you know, again, consider yourself in a good position to do this, but also realize that there's competition out there, and there's competition, you know, from agents, from our volume growth. You know, our volume growth here, what is that going to attract? If we're selling more houses at higher prices, what's that attracting? That's attracting more people to become a real estate agent. So again, you're going to have more competition going forward. if these volumes keep up, but take advantage while, the agent count is still where it's at, but the volume is way up. Everybody kind of asked me just one last thing, that everybody asked me what my best year in real estate was. And I tell them 2013, and they're like, well, that's kind of an odd year. Why would 2013 be, your best year? Well, if you look back, and I'm just going to do this as an example, is I feel like we're in one of those moments right now. So if I do city, so I'm going to do Mount Pleasant because that's, where I do most of my business. So if I look at Mount Pleasant and I go back, here we go. So if I just do Mount Pleasant, and I'm going to do a rolling 12 months. So how do we get paid? We get paid off a dollar volume, right? So look at what happened in 12. So the beginning of 2012, Mount Pleasant was selling about $500 million in a year, right? So 500 million a year. Look at, by the end of 2013, we were almost $1 billion. So 12 to 13, the volume went up, almost doubled, right? What did the agent count do?
Nothing.
Almost nothing, right? So when your volume doubles and your agent count doesn't, if you're not matching this growth, then what are you doing as a real estate agent? You're falling behind. So what you have to keep in mind is we're in one of those moments right now. And again, I'm going to take Mount Pleasant out of here and do all again. So if I do all the areas, we're in one of those moments right now. When we look at it on a monthly basis, is you have to take advantage of this market right now, because we did not all of a sudden go up 56% in agent count, right? So think about it, year over year, 56% higher in volume, which means agents' income potential went up 56%. Well, look at your personal business. Did you go up 56% this July compared to last July? And again, you have to realize that if this continues at this pace, that will draw additional competition, but take advantage while this volume has jumped tremendously, and take advantage of this window of time. And that's what I did back in 2012, 2013, is the volume was way up, but the agent count was going nowhere. So again, we're in one of those moments in time to take advantage as a real estate agent. So don't let your foot off the gas right now. So Compton, did you get that listing?
Yes.
So you're back pretty quickly. So anyway,
Yes.
If anybody has anything else to share, one thing that I know that I see, I think Jan's on the call too, is that I'm gonna send out an email, because I want to create a little bit of desire to look at these numbers on a regular basis. So I kind of share with Jan and Crompton occasionally when I see numbers that kind of like the $1 billion numbers, or when you see the volume, the number of houses under contract. So this morning when I looked, I think we were about 3,730 active listings. So what I'd like to do is, like, let's get a little wager going, what the count is going to be January 1st of 2021. And so I'll send out an email on this, but let's all put, if you want to, put $10 in. We'll give half to KW Cares, and we'll give half to the winner. And I'll put a deadline on it, but I want people to watch these numbers, because to go from 5,600 listings in March to 3,700 is a fairly dramatic move. So what I'd like to do is have agents be able to really kind of focus on the numbers that matter for your business. The number of listings, it matters for all our businesses, right? So have an awareness of where the numbers are going and where it's headed. So I'll send out, I let Crompton take a guess at it. And then about 2 days later, I said, you might want to revise that, because I think we might be there by September. So anyway, I'll send out a little email that kind of allows everybody to participate in this. But look at these numbers on a regular basis. And again, we'll do this once a month. If it's, if agents find this of value, I don't mind sitting here and going through all this, because this helps me in my business look through all this. So anybody have any questions?
Anton, Sean had a question in the chat about current thoughts on forbearance impact.
So, and again, let's go back. I mean, this is a good reference point. If we go back and look at closed sales, right, and we look over time, let's go back here again. because this is what we've all, I mean, again, I've only been in the business for 20 years. Well, I've been through 9/11, the recession, and now COVID. And so there's three fairly significant events that I've learned from what has happened in the past. And when you look at back here, look at the peak was basically January of 06, we were going at a pace of about 18,200. And then as time went on, that count started going down. But then the percentage, when you got into this range here in 2008, 9, 10, you had a fairly significant percentage of those that ended up being short, even 10 and 11, that ended up being short sales and foreclosures. And again, I might be able to go down and break down what we're labeled at, but they didn't always label everything the correct way. But where we're at right now is that I think we have a window of time that until the second half of next year, I think lessons learned by these banks and lenders back here, they're not going to rush to foreclose on people. You know, there's going to be a time delay that I think is going to be probably somewhat federally mandated. You know, the federal government realizes what happens back here, and the people that run these banks, they survive this period of time here. And by any means, they don't want to create a similar situation back here because it hurts their own assets. So I think you're going to see if people get foreclosed on or have to short. Now, see, short sales, I feel like are going to be a much lower percentage because part of the problem with short sales back here was because people's house values were going down, right? So, and I can't break it down to this window of time, but when your house value goes down, and you didn't put much down, then you were upside down, right? And if you're upside down, you're much more willing to walk away from the house. This price growth, what has that created? It's done a few things. Since in this window here, lending has been more challenging, right? You have to be higher credit, higher down payments. You have to be much more qualified, but also people have gained value in their homes, right? So people have gained value. So now they have actual equity in their houses. And again, I'm not sitting here saying, I don't see the situation at the moment where house prices are going to go down in Charleston. I'm not saying about other areas of the country, but you can't have this limited of a supply and this high of a demand and think prices are going down. So people have equity in their homes. And if they have equity in their homes, they're not going to easily walk away from that house. They're going to do whatever they can. They're going to borrow from parents. They're going to find a second job. They're going to do whatever they can to hold on to that house because they have equity in it. So we're not going to, in my opinion, we're not going to have the same problem we had back here, even if we run into some foreclosures. And again, if you have equity in your house and you can't make the payments, you can still sell your house and walk away with some money. Right? So it's a different situation than we were back here. Back here, people were upside down. So if they could stay in their house for 18 months and not make any payments, of course they were going to do that if the bank let them. But here, they're going to fight to keep their houses because they do have value in it. And even if they can't make the payments, they can sell it and take some money out of it. So again, I think the second half of next year is going to be something to watch. It takes some time for foreclosures and things to develop. And I think obviously with the election coming up, they're going to try to push any bad news past the election into next year. Everything's getting pushed down the road. But if we watch the numbers on a monthly basis, I think we're going to see things develop over time. But I'm not raising any flags in Charleston on value right now because we have, just too much demand compared to the supply that's there. And I think our challenge as real estate agents, forgetting the consumer, the client for a second, I think our challenge as real estate agents moving forward is what I'm worried about is the transaction count. Yeah, we've had a ton of volume, a ton of sales, but as that inventory goes down, how are we going to write 500 contracts a week with limited inventory is my concern. So it's just something to watch. It's like we need people to want to sell their house to have those transactions. And I think what we're doing is we're lengthening the time that people want to spend in their house. Now it's stretching out in time. As a real estate agent, wouldn't you love every one of your sellers to move every year? But I think what we're doing is that time frame of people living in their houses is stretching out. We're like, hey, I got a really low interest rate, good on the payments, we're good. This is where we're going to be. I'm going to stay in my house longer. So as that starts to happen, that's what's happening with this available homes for sale. That's what's happening right here is people are deciding to stay in their houses longer. And again, it's much more pronounced when you look at it on a monthly basis, but this is the effect we're feeling. So again, from a real estate agent business standpoint, we really have to watch the transaction count and number of houses that we can sell over time. So that's something that we'll look at. So when we look at these numbers, we can look at it in a lot of different aspects, how it affects buyers, sellers, but also how it affects your business as a real estate agent. So all of that going into play is that let's watch these numbers on a monthly basis, and we're going to see how we need to shift our business, as things shift. And shift doesn't necessarily mean a bad thing, right? We have, don't you think COVID has shifted the business big time, but not necessarily in a bad way? Look at the volume of houses being sold is incredible. So again, don't think of change and shift as a bad thing, but be able to adapt to it so you can improve your own business. So Sean, to answer your question, let's watch it on a monthly basis, and we'll be able to see when things change and if any of the forbearance and foreclosures start to have an effect.
Have you heard anything different this past month or so than a month or two ago?
So
I heard the national forbearance rate is down. I know we're not national, but you can't help but wonder what's local.
Yeah, and so watch going forward, because obviously Congress and the White House have been discussing another stimulus package this week, which it's Friday afternoon at 1. They're not passing something today. Who knows where this is going, because they're going on recess for a month. But that stimulus package of whether, and I think the biggest player of all of that is whether the unemployment continues or not. That unemployment, that extra $600 a week, that's how people are paying their rent and paying their bills. And if that truly, it's already over, right? It finished at the end of July, so it's out. So the effect is, if they don't supplement it in any way, how many people are going to stop paying rent, right? And then the landlords have to go through an eviction process. Don't just think of the sales right now. It's like the eviction process with landlords is going to be very interesting moving forward, of tenants who can't pay, and then the regulations and moratoriums they put on evictions. When all that kind of opens up, how much of that is going to play with our market. Now, I think Charleston is still going to be buffered compared to a lot of the other areas, but it's still going to have an effect on us. And there's been proposals of, well, instead of $600 a week, is $200 a week, or 70% of their pay. I mean, who knows where it's going, but it's going to have an effect on those people who are still unemployed, and that money runs out. What's going to happen next? So that's something to watch. And that's not going to have an immediate impact on these numbers we watch, but down the road, it will have an impact on us. And again, buyers whose credit's been destroyed potentially with, either if they run out of unemployment supplements, and then they're going to miss some bills, and then now you have to go through credit repairs, or they might take a couple years to get out of it. So all of that is something to watch down the road. I still feel like Charleston is a relatively buffered area to that, but we're still not out of the woods, considering we are a very high tourism driven area, food and bev and hotel and tourists. I mean, so we are not unscathed from all of this economic impact. So all of this stuff will show up in the numbers at some point. And it's just, if we watch on a regular basis, we'll be able to see what's coming our way. So, well, it's 1 o'clock on Friday afternoon, and I'm sure everybody's probably tired of listening to me. So I will, and again, I'll send out an email that everybody can kind of join in this little contest here that we're going to have. So it'll keep everybody attuned to the numbers. But so everybody have a great weekend. We're around if there's any questions. Tiffany, do you have anything else that you needed to share?
All good for me.
Okay. All right.
Thank you so much for this. This is always just, I mean, you put it so simply. So thank you. Super helpful.
Yeah. And again, this helps. I know this sounds strange and you might take advantage of this. This helps me with my business. Being able to explain it to this level of detail and watch what's happening, it helps. When you teach something, you learn. and again, I encourage all of you to go through these numbers and be able to teach your clients what's happening, and you'll become a better real estate agent because you're able to convey to them things that other agents are not able to. So,
Yeah,
anyway.
Anton, real quick, I have a
Yep.
question for you. What's the difference between the increase month over month for July in units compared to the increase month over month for volume?
So on units, so if we look at closed sales, we jumped 31.6%.
Almost a 20% difference.
Volume was 56%. So what is that telling you? That's telling you the higher end properties are moving, right? And again, if you would have asked me back on March 15th when they said my girls were not going back to school and everything was shutting down, if you would have told me, hey, you're going to be setting records in about 4 months for number of homes sold and higher end properties going to be selling, I'd be like, are you kidding me? There's no way that's going to happen. But here we are today, August 7th, and here we are, high end properties are moving. There's a lot of cash being put into Charleston from people from out of town. And again, it's pushing our real estate market low end to high end, all the way through. It's pushing our market. But also, if you have sellers, so you have some sellers, has it ever been a better time to be a seller than right now? I honestly think the answer is no. If you have sellers on the fence, lowest interest rates in all-time history, we're setting records on volume and contracts. We have lower inventory than we've ever had. We have more buyers. And where's the negative with being a seller right now? So if you have some sellers like, I'll wait till spring or till next year, it's like, and again, there needs to be a definition of the reason they're moving, but why would you wait? You are in the best seller's market. At least in 20 years since I've been in the business, it's the best time to be a seller. So, and again, conversely, it doesn't mean it's a bad time to be a buyer. You have the lowest rates in history. And I tell people, and especially, younger people, and now I consider myself probably not the younger people, but younger people, if you lock in on a 30-year fixed rate at 2.75%, never sell that house. Like that is even if you don't live in it, keep it as an investment property. That can be part of your retirement plan because you're never going to see these rates are unheard of, and rentals will go up over time, values will go up over time, but you're locking in an investment at 30 years at 2.75%. If you can buy it as a primary, turn it into investment property when you leave it. You don't sell it because those rates. I bought a house in Mount Pleasant at 8.25% on an ARM in 2001. So for me to think about back then, 2.75% on a 30-year fixed even being possible, that was unheard of. So, if you are a homeowner or you're going to looking at a purchase and you can get that type of rate, never sell that house. That is a great investment opportunity long-term. So anyway, everybody have a great weekend. And I will see some of you in the office, and I will see some of you on Zoom next time. So, all right, be safe.
Later. Thank you.